All right. Hello, everybody. Thank you for being here for this panel. So the panel is about scaling stablecoin payments, compliance, UX, and global distribution. So that's a whole program. Maybe let's start with some introductions. Maybe first, Eunice Lee, you are crypto BD at Revolut, you are ex-BCG, and just, fun fact, she's been doing kickboxing for 5 years, so be careful, guys. Can you please introduce yourself and tell me how you contribute to scaling stablecoins?
Thank you, Emilie. Great, nice to meet everyone. My name's Eunice, and Emilie said I am part of the crypto team at Revolut. For those not familiar, Revolut is a global fintech and licensed European bank. We serve over 60 million users now across almost 40 countries. And crypto is at the very heart of our offering. So my role at scaling stablecoins is basically to help tailor our offering to fit the full spectrum of users who crypto with Revolut, be it retail users, business users, advanced traders who use Revolut X or Revolut Ramp.
Thank you. All right. And then next to her, we have Denney Kwok, Chief Product Officer at Mento Labs. He's ex-Circle, ex-Google. His hobbies are snowboarding and losing money on perps. Can you please introduce yourself and tell me how you contribute to scaling stablecoins?
Yeah, thanks. Denney, if you haven't heard of Mento Labs, we are a decentralized stablecoin protocol. We have 15 local stablecoins, including USD and many emerging market currencies live. We're also building non-slippage FX trading, powering the future of on-chain FX, so you can trade, emerging market currencies for a euro or a dollar at no slippage on-chain, whereas like the AMM model has slippage depending on the liquidity depth. Yeah.
Thank you. Then next to him, we have Shah. He's the head of growth at Gnosis, and he supports Circles, not to be mixed up with Circles. And you are ex-founding team of GnosisPay. And then also, you are a certified scuba diver and a Reiki healer. Can you please introduce yourself and tell me how you contribute to the space?
Yes, thank you for the kind introduction. And hey, nice to meet everyone. I've also lost some money on perps, by the way. But yes, I mean, I've been in the on-chain payments, stablecoin space since the last 3-ish years. Was part of the founding team at GnosisPay. For those who don't know, we built the first kind of self-custodial debit card program that was on-chain. And now we help businesses and developers ship like a card program for their wallets, for their businesses in like days and not months or years. Very cool fact, we just are very close to hitting our like 1 millionth transaction since launching. So we're super excited about it. Last few months, I've spent time building Circles, not Circle. And it's not a stablecoin, but it's what we see as the future of money, like a big bet on a future of money. It's an alternative to the dollar or the euro. It's basically a new world currency. And one key feature there is we're decentralizing money creation. So instead of, for example, the Federal Reserve or central bankers determining the monetary policy, determining how to print money, how much to print money, we decentralize it to the individual level. So every individual creates or prints their own money. We launched last month, so that's been taking a lot of my time. And outside of my day job, I also do a lot of research on this space. So I am publishing like a small thesis on the on-chain payment sector in the next few days, hopefully. So yeah, that's a little bit about me.
Nice, thank you. And then next to me, we have Sergio Mello, the head of stablecoins at Anchorage Digital and advisory committee member on the Global Dollar Network. Fun fact, he was a crypto advisor for Reddit in 2021. And he's also a pilot in his free time. I think that's a pretty cool hobby. Can you please introduce yourself and what you do to scale stablecoins?
Okay, we go straight to the action. So thanks for the kind and elaborate introduction. I have past of entrepreneurship. I now am head of stablecoins at Anchorage, and before that, I've been building the stablecoin world for a few years. And before then, I grew up in Italy, being an entrepreneur not far from here in Torino. And so coming here is quite a deep experience for me. Driving down from Torino is literally a trip down memory lane. But it's fun to be here at DeFi summer now. So all things come back to in circle. No pun intended. And so at Anchorage is an institutional platform. We're home to the first and only crypto bank as licensed by the bank regulator in the US, the OCC, the Office and Controller of the Currency. We also have a Singapore major payment institution, a Cayman licensed trading desk. We acquired Mountain Protocol, the issuer of USDM, a couple of months ago. Amazing team, amazing license in Bermuda, and amazing tech stack. So we're very deep into stablecoins and tokenization and everything that stays just before and after the business of actually issuing a stablecoin. The one thing I can tell you for sure is that Anchorage is not issuing its own stablecoin. That's not our business. Everything else is.
Thank you so much. And yeah, I'm Emilie. I'm one of the co-founders of ChainSecurity. I do BD marketing, and I hand out these bugs if anybody has seen them. If you want some bugs, I have some for you.
I want one.
Yeah, for sure. This. Here you go. All right. Before we go deeper into the different topics, so we kind of have these 4 topics, right? Compliance, UX, incentives, and then kind of bottlenecks in distribution. But before we go in that, I was talking with Deep just before coming, and you were talking about this thesis that you're writing, this research you made on stablecoins. And there is one thing, you think the big winners are going to be a certain categories of actors. Can you tell me a bit more about this?
Yes. So, I mean, my hot take for the thesis is, maybe some context. I've been trying to just map out the entire on-chain payment sector that is currently live. And what I mean by on-chain payments is businesses, individuals, etc., that are helping money move from point A to point B that constitute as economic activity, not just like trading or exchanging. So in that space, I personally feel the orchestration platforms, the stablecoin orchestration platforms, are the best kind of position to have the next Visa or MasterCard-like outcomes in this new revolution of finance. And you would think that Visa and MasterCard, like being networks, tend to accrue the most value. I do not think blockchains right now are best positioned to accrue that kind of value. I do think these orchestration companies are. And what I mean by orchestration are basically companies that help businesses or developers issue blockchain wallets for their customers, move money from point A to point B, deciding which chain to use, where's the best liquidity, how to move it the fastest, in a compliant and a regulated way. I think these companies stand a big chance to have those next Visa, MasterCard-like outcomes. So that's the hot take.
Thank you. Also, before going into more questions, I'd like to say 2 things. First, you're encouraged to talk amongst each other. So if you have a question for another panelist, feel free. I'm not the only one to ask questions here. You can go ahead. Also, the audience, I think we don't have time for Q&A afterwards. So feel free to raise your hand if you have a question. I'm very happy to take your questions as well. And then I love when people tell me stories. So if you have a good anecdote, because really what you bring here that nobody knows is your personal experience, your own challenges. So if you want to bring any kind of personal touch to this, I'd be very happy if you could do that. This being said, when did you get in the stablecoin game, and what has surprised you the most since then?
I go first?
Allez.
Okay. I got in the stablecoin game when I was designing an architecture for a special type of Visa card. We were making the chips at the time with Tengen. And I understood that in order to have digital assets flow through traditional payment rails and schemes like Visa, you would need an asset that was not volatile and was safely pegged to the underlying currency.
When was that? Which year was that?
1920. And 19. And so that project eventually became the first iteration of GnosisPay. And I guess now you're already at iteration 2 or 3. So thanks for taking the lead there. And this is a very important application of this blockchain and payments. But that's when I understood the stablecoins were going to be the contact point between traditional finance and decentralized finance. So ever since I've been working on stablecoins, I entered as an entrepreneur in the worst possible moment ever during the the Biden administration. And obviously, if you want to hear stories, these are horror stories, and I'm not sure how our audience will be happy, but our CEO, Nathan McCauley, is on record in front of the Senate explaining how even a bank like Anchorage could get debanked during those dark years. Time is obviously changed. The new administration is way more friendly, and I think we're catching up with everything that was lost to lack of innovation in the past 4 years. But those 3-4 years were enlightening because they showed how institutions, unfortunately, only have so much freedom for as much as people inside the institutions may want to drive innovation and adopt new technologies. They're still bound by the confines of regulation and law and political environment. It's inevitable. That's how the world goes. And the trillions of dollars of money supply that will inevitably trickle into decentralized finance and blockchain rails was contained like a concrete dam in a water reservoir for the past 4 years, and now the dam is being breached, and we will see a big flood of liquidity going into blockchain in the form of stablecoins, but this couldn't happen before. So there were unmeasurable, intangible forces that were keeping everything frozen for 4 years, and now it's a thawing moment.
Thank you. What about you guys? When did you get in this game, and what surprised you the most?
Yeah, I can go. I think kind of similar to Sergio, I joined right after the FTX collapse. What year was that? 2022, I think. I joined Circle. Just to give a little bit of background, I joined from Google. I did a lot of payments work at Google. I worked for the Play Store. What really got me interested in stablecoins is Google Play being like a platform with 3 billion users, a lot of that is in emerging markets and developing markets. So when we were working on payments, we were really looking for solutions for people that were underbanked and undercredited or uncredited. And it made me realize like the value that stablecoins could bring to those users. I mean, that's how Tron and Tether really scaled in Africa, Latin America, and places like that. So that really piqued my interest. I think similar to Sergio, that was kind of a state where there was a ton of interest in exploring, but everything was just halted to a stop when I got to any senior level review or to the board level review. And I think like this year, even in the past 6 months alone, the tone has completely shifted. I have local congressmen reaching out to me, trying to understand stablecoins and crypto rails. It's really, really encouraging seeing enterprises really come out and trying to tinker with different things in their flows. I think Revolut's doing like a great job in bridging that gap. I think funny things are people still kind of bucket DeFi into this one broad brushstroke where there's like different elements of it. And I think in the future, we'll see DeFi be a thing that's just like infrastructure where people just transact on it and there's like a UI layer on top of it. So I'm really excited to see how like UX changes over the next couple of years, especially as, you know, a lot of developers in this space focus on infrastructure level things and don't really think about the UI, for example. We won't really hit critical mass until, you know, you don't even realize you're building or using crypto rails.
Completely aligned, and thanks for the shout out for Revolut. I personally will I'm probably the latest to the party. I started my stablecoin journey probably over a year ago. It does feel like a dog year with everything that has happened, regulatory shifts, M&A activity, very clearly shifting expectations of where stablecoins fit in the financial landscape. But what has surprised me the most is that probably 1 year ago, no one back home in Hong Kong even knew what a stablecoin was. And now my friends are texting me asking, what are the stablecoin regulations in Hong Kong going to do to my financial portfolio, what is USDC, what is USDT. So it's like, I think, really hitting home the message that stablecoins are coming to the masses.
I think a funny thing with the Circle IPO and the success of it, it's been kind of funny because everyone and their mothers and aunts and uncles have been texting me and asking me about it. But it's just kind of funny. Everyone thinks I'm rich, but yeah, I lose it all in perps.
Don't worry, we're going to talk some more about Circle on this panel very soon. You will see.
Yeah, maybe just to kind of build on all panelists' points, maybe I have two kind of points that surprised me today. One is it's close to 16 years from when Bitcoin's white paper was released, when we introduced the proposition of a new electronic money system. And we're still nowhere close to it. We are still like, it's been 16 years and we still don't have people actually using stablecoins for payments, which to me is shocking. And number two, on a positive side, is what I realized over the last few months is today it's easier now than ever to ship a consumer neobank, which is connected, which is on-chain, which has connections to like local bank accounts, and which has a card to spend at over 100 million merchants worldwide. You can do this in days. This was something that was probably taking at least a year or so before. And that's massive, right? The follow-on effects of this are going to be huge. So, yeah.
Yes, this is probably the most important thing we need to learn is that blockchain technology allows us to break the barriers and disintermediate. And one angle to see it is retail, self-sovereignty. I can have my own Bitcoin and self-custody wallet, and I don't depend on the banks. Cool. Yes, we all like that. But really, the real transformation is that entrepreneurs can start a bank in a day. That's a real transformation. That's what leverages and scales.
I think to Deep's point earlier, how you said the payment or stablecoin orchestration layers are the real winners. I think if you think about the banks, with the consolidation into pretty much just the GSIPs and all the regional smaller banks have been getting bought up for this exact purpose, I think those are going to be kind of the real losers in this space, in this new paradigm that we operate in.
So,
Makes sense.
Good. Okay, so now we're going to move to the compliance section. And for once, the compliance section is going to be the most exciting one. So I'm going to ask for some hot takes. And first, so Sergio, Anchorage released a stablecoin safety matrix a few days ago. And if you use this matrix, it's pretty interesting. You decided to phase out Circle USDC and Agora AUSD because apparently they're not as good as Tether, for example. And so, yeah, my biggest surprise since I got in the stablecoin space is hearing someone saying that Tether is more trustworthy than Circle. This used to be so far from the narrative a few years ago, and now you decided to phase out the support for USDC. Can you please explain what is this matrix? Why would you phase out USDC?
So Anchorage was born out of the need for institutions that have the largest assets under custody and management in the US and in the world to have a safe and trusted environment to keep those assets. So custody and trust and prudential regulation are core pillars at Anchorage. And prudential regulation was not there with stablecoins until now. So the past 5 years of stablecoins, where USDT and USDC really went from zero to hero, were a very different world from the next 5 years. The Genius Act is being accelerated, hopefully going to the House next week, and our president would be able to sign it within maybe a month, hopefully. That means that at Anchorage, where we do have a responsibility to inform, educate our clients about the assets on platform and let them understand what's the choice of assets on platform, we have also a responsibility to align with the future environment of regulated stablecoins. In this environment, with this decision framework, we started working on education. So the stablecoin safety matrix is a very simple to access matrix that factually regroups together a few stablecoins by the prudential regulation. So what regulator, sovereign regulator, is overseeing the issuance, and by quality of the reserve assets. And to answer your question, USDC did not score on the top right quadrant, but scored on the bottom left quadrant with other stablecoins because their issuance is not regulated by a prudential regulator, besides allegedly a small portion in
Where
Europe.
is USDT regulated?
El Salvador. El Salvador digital asset regulator. And from the reserve perspective, USDC has about 15% of their reserves in demand deposits, bank deposits, which is exactly the reason why a few years ago they incurred into some trouble with a DPEG, relying too much on liquidity on demand deposits. So that is still the same. That has not changed.
The SVB crisis? Okay.
SVB, the 3.3 billion at SVB. So that hasn't changed. It's still the same. And philosophically speaking, we think the stablecoins are a gift to mankind because they do not depend on fractional reserve banking. It's not broad money. It's risk-free money. So if we do put too much demand deposit in the reserve mix, we are deleting that beautiful property of stablecoins, and we are reverting to tokenized deposits. I know that these days the lines are blurred. Unfortunately, MICA is not helping in mandating stablecoin reserves to be heavily tilted toward bank deposits, but we think that our clients deserve to understand what are the metrics they should consider when they evaluate which stablecoin to keep in their wallets.
I have a question, Sergio. What's the optimal collateral mechanism for the best stablecoin?
As of today, the minimum possible amount of the bank demand deposits, and the rest with the most liquid risk-free assets, which is obviously a combination of the short-term T-bills and money market funds and cash at the Fed, if possible. Okay, cash at the central bank with some yield is possibly the best.
That's fair. I think T-bills do carry some risk too, though, right? As you think about like short-term duration risk and things like that.
Yeah. I mean, liquidity management and maturity management is obviously a stablecoin issuer's job, and making sure the reserves are well adjusted to market changes, rate changes, and liquidity requirements.
Probably still lesser risk than like having bank deposits, so makes sense.
Well, we're a bank, so I'm not saying that banks are bad. I'm just saying that a stablecoin is a very different product from a bank deposit.
Okay, so we had one compliance hot take. Do we have other compliance hot takes over there? Eunice? No. Denney?
I don't have a hot take.
You don't have a hot take? It's okay. We have enough things to talk about. I don't need to pull them out of you. Okay.
I actually have one. I feel like people are underestimating or probably not giving enough importance to capital controls also coming on chain. So I mean, we're in Cannes. We generally look at the Western developed world, where there are fewer capital controls. But when you go into emerging economies, you are still not allowed to hold currencies outside of the home currency beyond a certain amount. And the government really regulates this for a bunch of reasons. And obviously, when people hold USDC on chain, the government has a lot less say on that. But I expect governments to do something about it. I don't know what, but I expect them to come in some way, shape, or form that should also affect the space moving forward. So that's something I feel is not being given enough attention.
So capital controls may be coming also for stablecoins. Okay.
I think this is not a hot take, but I believe in the short term, we're going to see a lot more other countries and regulators and central banks take a more adversive approach to dollar stablecoin dominance. If you think about what your incentives are to promote like economic flow in your country, let's just say like India, for instance, they're really disincentivized to have dollar stablecoins be a medium of transfer, right? So I think you're gonna see a lot more come out in the next year or two. Governments move slow, I guess, but you're gonna see a lot more of that push back on the dollar stablecoin dominance.
Yes.
Nice. Thank you. I don't know.
Hopefully that is going to open the door to those countries with exotic currencies to facilitate stablecoin environments, regulated stablecoin environments in their currency, which I think is the big opportunity here to have on-chain effects and leapfrog completely the CLS environment of today.
But that's
Good for
what
you
you
guys,
do,
right? Good for
right?
you guys.
That's the thesis we're building towards. So we want to be kind of the infrastructure layer so you can trade on-chain efficiently.
You're welcome.
Thanks for the softball tee up.
So I had another question in the compliance, but if it's not inspiring, we can also skip it. I was wondering, how do you think MICA and the Genius Act are going to impact stablecoin scalability?
Go ahead.
Yeah, I think putting the legal specificities aside, I think these regulations, these frameworks are something that institutions have been waiting for a long time. Institutions such as Revolut, who try to play by the rules. We have been reading between the lines in terms of what we do with crypto, what we do with stable coins. But now there are actually black and white rules about what we have to do with them and what it means to issue a compliant stablecoin, what it means to support compliant stablecoins on our exchanges. And so, regulations aside, it gives the clarity that exchanges or other players need to be able to support these stablecoins. And I think it also marks a turn in how we perceive stablecoins, right? They're no longer just a DeFi native cool thing in crypto, but it's more about embedding them into key infrastructure day-to-day facilitating payments now. And these regulations enable us to do just that.
Thank you. So now I guess we can move on from compliance, or do we have some last thoughts on the topic?
Well, I can say it out loud. I think that unfortunately MICA has, under the guise of clarity and transparency, actually hampered the possibility for stablecoins to grow in Europe. It's very obvious that the banking infrastructure in Europe is really good. I mean, SEPA and SEPA Instant are fantastic settlement environments. So clearly the need for stablecoins in Europe is lesser than it would be elsewhere. But at the same time, forcing stablecoins to have a 2% extra reserves and 30 to 60% of the reserves in demand deposits defies the whole point. So today it is non-scalable and anti-economical to run stablecoins out of Europe. It's unfortunate. I think there will need to be change because lack of competitiveness will translate into lesser money for European corporates and less business.
Thank you. So now that we talked about compliance, I'd like to see the audience raise your hand if you think compliance is a big bottleneck for stablecoin scalability. Raise your hand if you think it's a big bottleneck. Okay. A little bit. All right. Now we're going to move on to the next topic, UX. And maybe I'll ask you first. Do you guys think UX is a bottleneck for stablecoin scalability? Raise your hand if you think it is a bottleneck. No. This guy should, he knows. All right. So UX doesn't seem to be that big of a bottleneck. So I'd love to hear you, Eunice. What do you think about this? What are the biggest UX bottlenecks, and are there any, and how can we solve them?
Yeah, we've actually done a lot of user surveys on this, and I think the biggest bottleneck that we're facing right now is that users are presented with an unprecedented amount of accountability when they want to try out crypto. So say you download MetaMask or any other wallet, you get a barrage of risk warnings. If you don't back up your seed phrase, if you lose your private keys, nobody can help you. If you accidentally miss a character in the wallet address, sorry, no customer support. And so it's just whenever people want to try and test it out, they get scared, basically. And how we solve this problem at Revolut is that we try to mirror the UX that users are already used to and already trust. So for me, when I came from London, I flew here yesterday. I exchanged £300 from pounds to euros. And the users can actually do the same with crypto. So they can change from GBP to BTC or Euro to USDC or whatever. It's just any-to-any conversion. So the buy and sell is something that they're already used to and they already know. No additional steps there. Spending crypto, people already pay with our Revolut cards. We also have our Revolut crypto cards, which are accepted everywhere with Google and Apple Pay. So the way that they would pay is also exactly the same as how they would pay fiat. And then once they get more and more comfortable, we get them introduced to the essence of staking and sending, receiving multi-chain remittances. And we kind of introduce them on this like step-by-step journey instead of throwing at them, look, we have to do a completely separate onboarding, download a new app, back up your seed phrases, et cetera, et cetera. But yeah, we've seen this work really well with our users.
Yeah, maybe just to build on that point, I think it makes complete sense from a consumer standpoint to have or to not alter any existing user habits. So if a user is used to exchanging money at a click of a button, they should be able to do that. A user should not be seeing 10 different USD variations on their bank account. It should be one USD. And whether it's a blockchain representation or a bank representation or fiat representation, it doesn't matter to them. And I mean, that's what our driving force at Gnosis, at Metri, which is this consumer wallet we're building, has always been. And I guess Revolut's too. So, I mean, from a consumer standpoint, until we have more user empathy, I feel user empathy is the bottleneck to distribution from a consumer standpoint. And I feel like the other kind of big distribution, other bottleneck is distribution to merchants. Like what I mean by that is for merchants to accept stablecoins, it takes time. For example, Visa and MasterCard, they probably have over 100 million merchants across the globe. It took them 50 years to reach this point, to go merchant to merchant, onboard them into an existing system that's commonly used by multiple parties, right? So for us to expect that, hey, you can go buy coffee tomorrow with stablecoins and not use a Visa or MasterCard, but directly do it through blockchain rails, it takes time. It's not easy. And we probably need incumbents.
You said that 50 years it took them?
Yeah, I mean, sure. Yeah, I think Visa was born, 1960s? More than that, actually. So, so we'll probably need like incumbents coming, acquirers coming into blockchain, learning about blockchain, integrating them in their POS systems, and so many other things that I'm probably not even thinking of right now that needs to happen for actual all merchants to accept stablecoins without knowing they're accepting stablecoins. We're doing so at GnosisPay through Visa and MasterCard. You can spend your stablecoins at any Visa merchant. They do not really know they're accepting it. But the true holy grail is when like consumer to merchant is happening on blockchain and they're actually holding stablecoins and not off-ramping it to fiat. So I think we're still a while away. I think we underestimate how much time it takes to get merchant adoption.
I think you bring up a really good point about how many decades it took for these card networks to scale. I mean, I'm American. It took a global pandemic for us to integrate tap to pay when Europeans had it for, I don't know how long you guys had it for ubiquitously, but I don't think this is going to happen overnight. It's going to be a long, long slog. And I think companies like Revolut and other fintechs are doing a really, really good job thinking about the product design choices and consumer behavior and slowly kind of moving them on this arc until we have to kind of zoom out in the world we live in because not everyone else thinks or is accustomed to custodying their assets. They're just looking at their bank account and looking at their credit card balance.
I don't think we need more developers in crypto.
Can I add something?
Yes, I know you're passionate about merchants. Please.
I'll make a long story short. We only have 6 minutes. I'll hopefully not take the whole 6 minutes.
Another thing that's very important to discuss after. So
I'm not sure there's space for that. But okay. The audience here is rather young. So how many of you do remember the days where you were defragmenting the hard drives? What? Not many, but I'm surprisingly...
I don't.
You don't? Okay, so in old days, you would run a PC with a hard disk, with a physical disk spinning. And the information on the file system was rather rudimentarily spread around those disks. And in order to optimize the reading speed, you need to consolidate all the files on one single around the reading. Okay, so you would want to put all the pieces of the same files together, so it was easier to access that. Today with random access memory, obviously it's not necessary, but back in the days, every once in a while you need to get your computer to actually work by defragmenting, and you have this half an hour of listening to this beatboxing by your box. So. This is what's happening today with global settlement systems, and stablecoins are again a gift for mankind because they are the defragmentation moment where global rails, institutional, interbanking, merchant, payment schemes, retail, DeFi, all come together in one single rail that is blockchain. We can debate about that, but it's a single common technology layer with one single type of instrument, the stablecoin, that runs over it. So the defragmentation is inevitably going to lead to a lot of efficiencies, and that's why I think that trillions of dollars of money supply will trickle on the chain. Coming back to our question, is UX going to improve? Are merchants going to accept stablecoins? It's a wrong question. I think that
Apologies.
It's the wrong question. The real question that we have to pose ourselves here is, do retail really need to know that there's a stablecoin behind the dollar balance or the fiat balance they see on their app or their phone? And how well is the stablecoin rail going to work alongside existing rails? It's not going to be a click switch that all of a sudden goes overnight from everyone works with 16 settlement rails and schemes all the way to just a stablecoin. Clearly not. I think that the strides that MasterCard and Visa are making in helping and facilitating the last mile, the merchant settlement with stablecoin is the first good step, because from there you can walk backwards to rebuilding the whole money flow over stablecoin. But today, that's the most important part. So merchants today, some merchants that are willing to use it are willing to work with large PSPs and card schemes, and having their final settlement, the money that they finally get at the end of the day or week, to be intraday, over the weekend, and removes all the trapped liquidity and working capital because it's on stablecoin. Let's start from there, and that's already working, and that is the part that is going to scale up dramatically in the next year or two. Whether retail will actually transfer its own stablecoin of choice directly to the wallet of the merchant, absolutely not. There's compliance considerations. There's today I was listening to a podcast by Shopify. And they were saying that they devised a smart contract that takes a stablecoin payment by retail on escrow first, doing the authorization part, and then swaps over to capture in a second part. Of course, they have to keep it in escrow for a while. What if it's a North Korean hacker paying there? You can't just have everything at once. So the right question is, where do we start from? We start from merchant backend settlement, and then slowly it's going to expand like a virus into the rest of the financial systems.
Open question. How do you...
Do you?
No, we have 2 minutes.
She's not entering more questions now.
Yeah, I'm sorry. So we only have 2 minutes left, and so I know that you guys are cooking really cool things for the future, and I wanted to ask a little bit kind of what's coming. And I'd love to start with Revolut. What's coming next for Revolut?
Great timing, Emilie. It's almost as if we prepped this yesterday. But we are actively revamping our stablecoins proposition. We want to make it much easier for active stablecoin users to use Revolut. So first thing we're rolling out in the coming weeks is one-to-one USD to stablecoin conversion. No fees, no limits, no spreads. And so it will be, I think, even better than if you used fiat. Second, we are waiving all withdrawal fees on stablecoins. And if you're depositing a lot of stablecoins into Revolut, we'll even cover your gas. So do stay tuned. We hope it makes it much easier, much more accessible for especially users that get paid in stablecoins to use us to hold and spend crypto.
What about at Cello, at Mento Labs?
We are, I guess sneak peek, this hasn't really been announced, but we're about to ship V3 very soon, which makes the protocol much more scalable, allowing folks to mint and redeem at scale and allowing you to swap all currencies, especially the long tail emerging market currencies, at little to no slippage in an extension of our V2. Many more things to come, but I don't think I'm ready to announce that yet.
Thank you.
Nice. Well, yeah, just building onto his point before, I think at GnosisPay, what we are continuously doing is integrating local payment rails in each country we go to. So that means you can now simply do, like, for example, in Brazil, we launched last month, you can simply do a PIX transaction to a PIX ID we give you, and it gets on-ramped on-chain without you really knowing. And we're doing this locally across different parts. And we also don't charge any money to on-ramp or off-ramp since the past 2 years. And that's how we see the world to be. So that's one. And number two is working on Circles, the other project. Scaling that global currency to as many people as possible. And it's a big, bold bet. And we're super excited to work on that. If you are working in this sector at Gnosis, myself, generally, we are doing a lot of investments. We are partnering with a lot of companies for our products. Or if you're just like intellectually just want to have a chat about what the future of money and stablecoins look like, please find me. Thank you for having me here.
I can't really make announcements, but Anchorage being the most regulated crypto institution in the US and the Genius Act having a real quick path to becoming law soon, anyone from crypto protocols to institutions and merchants that are thinking of stablecoin issuance should definitely have a chat with us, and they will see some more news coming up in a week or two.
Yeah, and on our side, nothing new. We keep auditing a lot of the projects who are here on this stage and here. So if you need an audit, come say hi. And if you want bugs, come say hi as well. Thank you very much, guys. Have a great day.
Thank you.
Thanks, everyone.